Um, I'm recording, okay?
Okay, Lord, thank you.
Got to do something.
You're not sharing anymore, are you?
One moment, nearly there.
Okay.
Okay, now ready to go.
Okay, 3, 2, 1.
Thanks everyone for joining me for this very last session. This is a chance for me to give again a talk I gave at the beginning without wobbly cameras and so on. And for people who weren't able to be at the beginning of this conference, which is quite a lot of people, to listen to these remarks, which is essentially 10 steps to deliver on the 10 years. We've had quite a conference. We've covered a lot of issues. Let me try and get to the nub of what we have to do. First, the thanks to my sponsors, to our sponsors where we couldn't do anything without them. I won't go into names this time. I want to start with this slide. The Climate Bonds Initiative is 10 years old. It sounds incredible in a way. We were set up 10 years ago. We will actually have an anniversary celebration webinar to which you're all invited on the 24th of November, which is actually when the 10 years is up. Of course, it's been a busy 10 years, but I think the real significance of the 10 is about looking forward. According to the Intergovernmental Panel on Climate Change, we have 10 years to cut emissions by at minimum 50% globally. That's the 10 we have to focus on. It's a tough challenge. How do we go about doing it? Well, let's look at where we've got to so far. There's some bad news first. We haven't won on climate. The emissions trajectory is still grim. It flatlined last year. I mean, COVID looks like it's cut emissions 8%, but we have to achieve 7.6% every single year, year out, clean line average to meet that 50% target. I don't think we want to have a pandemic every year. I certainly don't. I probably won't survive. Getting a bit old. Which means we've got to make the other measures work. Climate impacts have started. This thing is underway. There's a picture in the papers today of the Golden Gate Bridge, orange, because of the fires around the bay. I was in Australia at the beginning of the year, where we saw the largest fires in recorded history. The collapse in wildlife as a result of that fire, those fires in Australia, was extraordinary. Scientists were talking about 1 billion animals being fried. We don't know about species that are left, and it's not a simple death, by the way. Park rangers who walk through these fires in California and Australia and other places afterwards report, well, they're suffering from post-traumatic shock because of the screeching of animals that are half dead from the fires. Screeching for the earth. And yet, we haven't yet taken adequate action. Floods in Bangladesh. Thousands and thousands of people having to be moved only a couple of weeks ago as a result of conjunction of rising sea levels, storm surges, huge unexpected floods. So we're not doing that well overall. The pandemic we're experiencing, as you've heard me say in previous sessions, is an expression of the distress of our planet. It is about collapsed ecosystems. It is fundamentally about environmental degradation, collapsing biodiversity, and pathogens jumping between species as a result. That's what we're experiencing. That's what we're being told by the health scientists, the research scientists in the area. It's a climate crisis. Now, causal relationship, challenging, but it's been predicted by the Intergovernmental Panel on Climate Change for the last 25 years, and they're suggesting we're going to have a century of them. Policy action remains patchy. Science is ignored most often. I mean, look at the lunatic discussions going on in federal politics in the US, in Australia, and in other countries around the world, where the science is somehow dismissed as an opinion. We've built our societies on science. They've given us wealth. They've given us health, evidence-based science. They've given us energy. We've now discovered it was the wrong kind of energy, but it's still got us to where we are today. We simply need to change course. We can't possibly advance our civilization, advance the world for our children, maintain our civilization if we're not listening to the science, which has been the essence of the modern world over the last 200 years. Policy remains patchy as a result. We still have that vast capex challenge. We've got about $90 trillion to invest between now and 2050 to achieve this transition. And yet our capital remains in places where it's not earning any money. It's not going to give you your pension when you retire in 10, 20, 40, 70 years if it's stuck in German bunds or Japanese bonds. It needs to be redeployed somewhere where to earn a living. And yet this fantastic opportunity, $90 trillion of investments in largely infrastructure-style assets around the world, which would help us pay for our pensions and our insurance policies, is still not being realised. Well, the truth is it started, but it's still way, way too low. So that's the bad news. Of course, we have had some wins. You've heard a few times this conference, people talking about renewable energy price point keeping on dropping. It is. It's extraordinary. Thanks to large-scale government action in Germany, in China, even in the UK with offshore wind. Wasn't economically sensible at the time, but it's given us all a dividend, driven down the price globally. So now it's a competitive source of energy generation. The visionaries have delivered. Investment belief is there. This is perhaps the juiciest and most important critical win. You've heard a few times in this conference also, there is no longer a view amongst institutional investors who represent $100 trillion of the world economy. By comparison, US GDP is around 17.5 trillion. Amongst the institutional investor community, pension funds, government funds, insurance funds, there is now generally certainty that change is happening and is coming. Policy change especially. It's a matter of when, not if. No one believes that the US has abandoned climate policy. Everyone just believes it's a hiatus, while the current president gets it out of his system. And that applies in every country. Investors in Australia, where there's a government that's been often reticent to deal with climate issues, if I can say it politely. Well, the investors think it's coming, and they're voting with their checkbooks, to be honest. So investment belief in the future is there. There is still a challenge of how and where to allocate the money. I mean, we've got evidence, which is the green bonds market. We have $1 trillion of green bonds now as proof that investors will invest if you give them places to go. This is no small number. I don't even can't grasp $1 trillion myself. Don't know how many piles of banknotes that is. But to give you a sense of flavour, the global bond market is about 100 trillion. So it's only 100th. It's got a long way to go. but it is already a hundredth and growing fast. And we have substantive understanding now of the benefits of thematic issuance, which has led to the growth of other kinds of bonds, which increase this number: social bonds, sustainability bonds, SDG bonds, and what we're positing in this conference, transition bonds as a next stage. This will grow and will continue to grow very fast. Regulators are acting, which is one of the reasons this market's going to continue growing. You've heard, if you're on the calls today, Frank Elderson and Satoshi Ikeda from the Dutch Central Bank and the Japanese Financial Services Authority talking about the steps they're taking. And they are encouraging Korean investments. It's part of the narrative now of risk mitigation, to look for ways to put your money in sectors that are more future fit, less likely to be impacted by policy and by climate impacts. In the climate change investment framework that we launched with Amundi and the Asian Infrastructure Investment Bank yesterday, we've outlined a universe to look at, which goes beyond just the thematic market, but looks at assessing entities in terms of how they are changing, transitioning, or how they're dealing with resilience and adaptation issues. So these things are beginning to happen. There is quite clearly evidence now that investors will go. There is quite clearly clarity amongst the regulatory community that they must act, and they are acting. We've had a win with development banks. A few years ago, it was a small portion of the portfolios of development banks. The EIB, I remember the first meeting I went, the European Investment Bank, they were arguing about getting to 25% climate lending. So now they're at 50%. The EBRD is about to go to 50%, the European Bank of Reconstruction and Development, and so on. The IFC will be announcing a 30-30 program supporting all of the commercial banks they work with for emerging markets to be 30% green by 2030. These are important initiatives, really critical initiatives. We're seeing the exploration of the boundaries of blended finance. Guarantee instruments are growing. Big funds like the Amundi IFC Ego Fund, 2 billion now, which bridges risk for investors in richer countries so they can participate in emerging market green bond issuance, are growing and growing. The Asian Development Bank is setting up its catalyst funds, and so on and so on. And governments are shifting. I wish they were shifting faster. That's our job, folks, to get them to shift faster. But I've been a member of the EU Technical Expert Group for the last couple of years, and its predecessor, the High Level Expert Group. And can I say, the journey the European Commission has gone on in that time is exciting. It is exciting. I am so proud to be a European citizen because the European Commission, our government in Europe, has got this story and they are moving hard. They are allocating substantial slices of their budget. They have brought in a recovery and resilience fund, which has green and resilience at its core, 750 billion euros, to ensure the recovery is in line with our climate and our resilience objectives. Building back better, in the words of the IMF Managing Director. So governments are shifting. The Chinese government has been shifting with its ecological civilization program, its new infrastructure development plan, allocating $1 trillion to all sorts of investments that are clean and green. Of course, not enough for shifting. That's what we have to do. So let's look at the next 10 years. What are we going to do? Well, the first thing is we do need to get tough on transition. It is time to be thinking about the tough sectors. Oil and gas, steel, cement, plastics. How do these things change? Aviation. Some of you might have seen the video by one of our technical working group members that kicked off today's event. There are pathways here. How do we shift the capital to make it? How do we bring the corporations that are in this space along with this journey in a productive kind of fashion? That's why we were so pleased to have Repsol represented on our panel yesterday, because their new climate strategy, which they issued since their green bond, is something to be cheered about. And I'm really waiting with excitement for next week's BP Roadshow when they're going ahead explaining their new climate strategy. I was a skeptic. I'm still a skeptic of some of them. I'm waiting to see the detail. But what I've seen so far of the BB tale, I'm thinking I might end up cheering. Now, who would have thought I'll be cheering an oil company? Let's have a look. The point is, these are the sectors we now have to start tackling beyond what we've done in the past. We do need to be thinking about resilience. In our focus on mitigation in the past, we have failed to recognise that we've actually lost the first half of a climate battle. This will now be, it is already a century of weather, climate and related volatility. It's going to be very different to the last century. We had benign weather conditions. That's gone. This will be a throwback to the 1600s that saw also extraordinary volatile weather around the world. I'm hoping we can do it better than we did in the 1600s, because in that century, we lost a third of the world's population to famine, to floods, to war, to pandemics. We have a benchmark, folks, that we have to beat. Resilience is the key to that. The first, as I said, battle has been lost. Volatility is now. We have to understand what that resilience means. And we need to build it into everything we're doing. There should not be an infrastructure project built on the planet without an adaptation and resilience plan attached to it that looks at rainfall, flood, heat risk. They're still being built without this in mind. The Thames Gateway in the city of London, where I'm built, was built in the 90s. Didn't really think about sea level rise. It's now going to have to be replaced by a better gateway way sooner, because we didn't think it through, even though we had the science telling us at the time. It means other forms of resilience as well. The resilience that's involved in addressing pandemics, for example. If you were listening to our last 1.5 hour session, 2 sessions ago, you would have heard us talk about economic, social resilience, and of course, ecosystem resilience. It's not just about protecting coastal plains, which is critical. It's protecting our economies and our societies and understanding, looking hard and understanding at what the evidence base says about how we do that. A clue. A predictor of resilience in an economy is the education of women. Now, you wouldn't have thought that 2 years ago when you were focusing on climate, but I'm telling you, this is a climate resilience investment, because women who are educated participate more in the economic life of society. They reduce inequality. They are better able to survive shocks. And sometimes it's a little bit tough. In Bangladesh, when we've had flood crisis, 2/3 of the people who die are women. 1/3 are men. Now, why is that? It's because they haven't had the chance of education. They can't read. They're not able to simply read the warning notices that come through, and their men are away in cities working. It's a lack of information as a result. This is criminal. This is a human rights disaster. And it's a climate problem for us all. You can now see that we have to conflate, bring together the Sustainable Development Goal agendas, the resilience agendas, and the climate agendas if we're to take this forward. Which takes me to my third point. Yes, it's complicated. Our job, certainly at the Climate Bonds Initiative, at the EU taxonomy, the Commission level, as bankers for that matter, is to make it simple. I liken this topic as creating an electric car. It's actually complicated. One that just works. It's taken years. But for us as consumers, we get into it, we put the key in and we drive off. That's how green finance, green bonds, sustainable finance has to work for the financial community and for citizens. We do the work in understanding what's got to be done, and then we make it really simple for everyone else that uses that. The taxonomy work is an attempt at doing that. It's got a way to go, but it's getting there. We've already set very clear demarcations in different sectors, which are fresh to people's understanding of what are Paris alignment investments. And now some of the agenda items for key sectors. Investors. You've been reallocating your assets, it's great. You've been investing in green instruments, which has been fantastic. You've been pressuring your corporations in the Climate Action 100 and the other alliances that are around, which I have to say make me full of hope to change. Those corporations need to change. We now need to go to the next level. If we are to create the future that we need to live in, it's going to require very activist steps on the part of investors as well as other people to engineer an investment boom. You know, when the oil companies became rich in the 20th century, they didn't actually do it by waiting for investments to come or just lobbying the corporations to change assets. What they did is they created investment opportunities, including occasionally at the odd coup. I'm not suggesting a coup here, but what I am suggesting is look forward to how we can transform our society. For example, growing green hydrogen. We heard about that earlier today. And then work with governments and other key actors who can change the settings of the system to ensure that it happens and you will have sustainable finance investment opportunities. You need to be engaging on energy policy. You need to be engaging on industrial policy. You need to be engaging on urban development policy. You need to be knocking at the door of the governor of Lagos and say, I stand ready to invest, but you have to do X, Y, and Z to make my investment fit my portfolio. Be in there or sign up with the people who can represent you to do that. But whatever, it's now time to get on the front foot, to push. You have extraordinary power on this planet. You manage our money, our pension fund money, our insurance money, our sovereign wealth money. We need you to be pivotal in creating this change and to make up, frankly, for the deficiencies in other sectors of our society. Central banks and regulators, you have won the intellectual mountain for us, and for that we are deeply, deeply, deeply grateful. You have shown in the papers of the Network for the Greening Financial System, in the papers put out by the People's Bank of China and many others, in the speeches of Mark Carney, that this issue of addressing sustainability and climate is now central to ensuring the stability of our financial systems going forward. That's a win. But we need to do more. It's not just about knowing this is the case. It's not just about making those risks transparent, which is a prerequisite, a fundamental prerequisite. It's about strong action to avoid further risk. We do need to understand this playing field that we're playing on is not level. It's tilted way towards dirty industries. That's the nature of dealing with a legacy economy. It's no one's blame, it's just the way it is. We don't have 20 or 30 years to level the playing field and readjust. We actually have to tilt it the other way fast. Otherwise, it's all going to collapse. I beseech you, look at incentives. Look at what you can do with collateral frameworks. Use your soft power. Conversations in corridors, which is 80% of your power. But whatever, it's time to become activist in ensuring that the changes to be made to ensure our financial system can be more stable in the future, can minimize the risks of this crazy volatility we're going into, are taken. For governments, you do have the biggest agenda. As I said, I'm deeply proud to be a European citizen at this time, but it doesn't mean I haven't got some suggestions for you. We ought to be figuring out how we engineer an industrial and urban transition of the likes rarely seen in history. When I'm in China, I often say to my friends, we need to learn from what China did in the 90s, the 80s, the 2000s. not learn from the environmental lessons. They were very bad lessons. But we did manage in China to get 1 billion people out of poverty. An extraordinary human rights achievements, whatever you think of the issues still playing around that particular topic. And we did manage to do it in an extraordinary fast way. We built whole cities out of nothing. Pudong was not there in 1990. It is now like Manhattan in Shanghai. This is what the world needs now. We need Chinese engineers and companies. We need them to revisit what they've done in China with a tough, robust green flavour, please. Addressing climate, addressing sustainability around the world. When I went to Shenzhen and saw what they've done with electric vehicles, all taxis are electric, all buses are electric, with the Shenzhen Financial Centre, built with shared air conditioning and low energy. I'm thinking every city needs this. I'm afraid I want these Chinese exports, and fast. It's not cheap labour. It's thinking about how we do it. But at the same time, we need to make sure we clean up the mess we've made in China, which is a big mess from errors in our decisions in the past. Every government should be having task forces looking at these rapid transition areas. The UK could be having a task force look at how to get cement down to become low carbon by 2030. And I can tell you it's easy. We have low emission cement available from a number of companies now. What we need is volume procurement. Mandated, it'll be the same price. Cement is responsible for 7 to 8% of global emissions. In Europe, we do need a European task force on shipping transition. All vessels coming into Europe by 2030 that are new should be low carbon. How do we achieve that? What about rail in the US to match China's system? In 10 years, we could do this. And then we could axe all those airport slots allocated to short haul between Boston and New York and Washington, D.C. that are so emitting, it's unbelievable. It is absurd that Amtrak is so slow and so poorly resourced in the Northeast Corridor. I hope an incoming administration, either this year or in 4 years, will tackle that issue. Steel. All steel sold from 2035 should be net zero carbon. There is no reason we cannot do it. It will require collaboration between countries. We don't want a trade war between China, the US, Japan, and Europe. We need a collaboration exercise to bring in the green hydrogen. And you will have heard today about the extraordinary opportunities to get the cost of green hydrogen around. Set up a task force in each area, bring the key people along, learn from the work of the Energy Transitions Commission that has already pioneered half of this sort of stuff. But link it now to what governments can do. Fiscally efficient measures. We're not going to be able to use debt to do this. That's going to be dealt with, that's going to be dealing with the recovery. But there is so much we can do. And partner with your investors. In emerging markets, the city of Lagos, we had the governor speak so eloquently on the first day of this conference, could be building mass transit systems using property value capture. That is, putting wedding towers and buildings on top of every station and getting the private sector to finance it without the public sector having to finance it. It's a simple model. It worked in Hong Kong. It worked in Tokyo. It's worked in a variety of Chinese cities. It can work in Jakarta, in India, and in Africa. 7. Treasuries. Your job isn't just to raise money for your governments. As you know, your job is also to support the development of capital markets with greater benefit for your country. You need to issue into the sustainable pace, as Thailand has done only very recently, to create liquidity, to create benchmark pricing. And you might, by the way, get some benefits for your treasuries, as Germany has last week. Help get capital markets going. It's the only way we're going to avoid the foreign exchange risks, the difficulties of getting capital to flow into emerging markets. We need the liquidity of a capital market to allow pension funds and insurance funds to invest in the places where money has to be invested in the next 30 years, which is the emerging sector, developing countries. 70% of the capital that we invest between now and 2050 has to be in emerging markets, not in rich countries, folks. Yes, we have to rebuild America's infrastructure. God, that's in a bad state. But it won't be where all the money goes. It'll be in Africa. It'll be in ASEAN, in sub-Saharan, I should say Southern Asia, India, Sri Lanka, and so on, and Latin America. For banks, you are the people we need to act. You, with your clients, the fund managers, are the ones that deliver the bridges between capital and green. If you don't act, nothing happens. If you create deals, engineer deals, structure deals, and you have such amazing ideas about structuring to manage risk, the money will flow. You'll be able to get access to some public sector capital, put up ideas to the Green Climate Fund who want ideas for blended finance. Speak to the development banks and those national development banks, some 200 of them around the world that are not leveraging their funds. Propose things for them to make sure that the capital will flow, but whatever. By the middle of this decade, we need to be investing some $7 trillion a year globally in infrastructure alone, and that has to be green, or at least 5 trillion of it is. It's way less than $1 trillion now. That's the prize. The investors want it. The governments are trying to figure out how to make it happen. Show them and do the deals that show everyone. Every time we get a big deal away, everyone wakes up. That's your job. I'm going to say it's a funny thing, the change since 2008, isn't it? We're at a stage of our history now when we really need the bankers. We need them to move to be green. That's why it's been so good to have so many banks supporting us this conference. To have people like Daniel Clear or Agnes Gork from BNP Paribas, Daniel from HSBC, talk about the green commitment. It's all around the world. Chinese banks equally, the Industrial Bank of China, amazing green commitment. Mizuho in Japan. But we need more. Citizens. That's us. That's us in our day jobs or either our night jobs. We need to be thinking about the future we want from our children. It's tough because we have lots of things to do in everyday life, but this moment in history, this inflection point that we're sitting at, when we've seen so many things change so quickly, some for the worse, when we're realizing the pain of not taking action, we need to think about what kind of world we want to build and frankly demand it. Demand it from our governments, demand it from our financial institutions. Imagine the future you want for your children and look at what they've got coming at the moment. It ain't nice. We have to shift this pathway. Finally, it's time now to transition, to shift to different economic settings, different social settings, different environmental settings, to a new financial sector, one that is utterly focused on sustainability at its core because it understands that this is the lower risk, the lesser risk path forward to pay your pensions, to cover your insurance liabilities. Not because they're doing it or we're doing it, because it feels good, because it's actually the way we need to go to ensure that we continue to get returns for our capital, that we can continue to build a society that has wealth, that has health, that has energy for all. The alternative is way, way too high risk. Thank you for being part of this conference. Thank you for your commitment to doing something to improve this planet, to create the sustainable future we need. Without that, we don't get there. Give me feedback. Let's see where we get to in the next 12 months. But remember, 10 years, 50% reduction in emissions, let alone the recovery and resilience agenda, we have to run, not walk.